Alright students, Bismillah Rahman Rahim. This is ARD, your accounting coach. Today we are going to discuss about manufacturing accounts. Manufacturing accounts are meant to be made by producers or manufacturers. Manufacturers are the one who are not selling products or services, rather than they are making products for use by the consumers. So manufacturers are also known as producers, and today we are talking about creating account for them. Firstly, the topic will start by discussing cost classification. Now, what does cost classification means? Cost classification means dividing the cost into different types, so we can understand how many types of costs there are actually there in a manufacturing environment. See, there are three basic elements of cost, such as raw material, labor, and expenses. Means if we walk into a factory where some products are made, maybe garments, textiles, there are three primary elements of fabric, or maybe a shirt or jeans. There are three elements. First of all, there is the fabric, which is known as raw material. Secondly, we have a labor input, that means whatever labor is working to make the product. And thirdly, we have expenses such as electricity, rent, depreciation, and so on. So first of all, we need to understand there are three basic elements of a cost, which is material, labor, and expenses. Secondly, we can also study cost classification. Second type is direct versus indirect classification. Now, what does direct cost means? Direct cost is a cost which can easily be traced, or a cost which can easily be identified in a particular product or service. Now, what does means a cost can be identified? A cost can be identified if it is a major cost. If the cost can easily be identified or traced, that this much amount of cost is being incurred in a particular product, in making of a particular product, the cost is known as direct cost. Or if the cost cannot be easily traced in a particular product or service, or if we do not want to trace that cost. Why we do not want to trace that cost? Because the cost is very negligible, means the cost is not a greater proportion of overall cost, so we will be treating this as an indirect cost. Now this is a bit tricky point. Direct costs are costs that can be easily traced, and indirect costs are costs that cannot be easily traced. See, first of all, we discussed there are three types of costs, namely material, labor, and expense. Now we are saying cost can be direct or as well as indirect. Now what does this mean? This means there are two categories, and we can make combinations from them, which means material can be direct material or indirect material. Similarly, labor can be direct labor or indirect labor. Thirdly, we have expenses. Expenses can be direct or indirect as well. Expenses can be direct and indirect. Now, having said that, we can see, now let us discuss some examples of material. Let's suppose if we are making chairs, wooden chairs, the wood for a wooden chair is direct material. Now, why is the wood that is used in making of a chair is a direct material? Because wood is a major material or primary material, means most of the material that is used in a wooden chair is wood. So wood can be traced, means if there is a carpenter who is making chairs, if he ask him how much amount of wood, means how much quantity or kg of wood that is being used in a particular type of wooden chair, so he will be able to tell you from his experience that this much amount of wood is being used in that particular type of chair. So wood is a direct material because it can be traced. Similarly, cost that cannot be traced is known as indirect material. If we ask a carpenter how many nails or screws will you be using in a particular type of chair, so what will be his answer? His answer will be that I have never thought of using how many nails I am using, and he actually does not keep a record of how many nails he is using in particular type of chair. Why? It is not that so he cannot keep record of nails, but the problem is that nail is a very cheap material and he does not feel it necessary for keeping record of the nails or glue, maybe glue that is used in making a particular chair. So glue, nails, polish, these are all indirect material because these are minor materials and these are not a major part of the product or service. Similarly, there are some other examples as well. Means if you eat Lay's chips, the potato that is used in making of Lay's chips is a direct material, and the oil in which the chips are being fried, the oil is indirect material. But because we cannot trace particular amount of oil that is used in one particular packet of chips. Let's take some other examples. If we are wearing a dress, of course we are wearing one right now. If we are wearing a dress, the fabric of the dress is a direct material because the tailor can give you an estimate of how much length of the fabric is being used in a particular type of garment or dress. Similarly, the thread or other stitching material that are being used, which are known as indirect material. Now, what does direct labor means? See, cost classification is very important and is instrumental in understanding manufacturing accounts. If we are unable to understand the classification of cost, we won't be able to further identify the types of costs that are coming in the exam questions. All the labor which is directly involved in making of a particular product is known as direct labor. Means the labor that is being working in all production departments such as cutting, painting, assembly, finishing, molding, testing, welding. All the labor that is directly involved in making of a particular product or service is known as direct labor, and the labor which is not directly involved in making of a product is known as indirect labor. Now, what will be the examples of indirect labor? Indirect labor may be the supervisor. If we can ask production worker how much time do you spend in making a particular product, he can tell from his experience, such as a tailor can tell that how much time of his will need to be concentrated in making a particular type of dress. A carpenter can tell that he can make this type of chair in 2 hours maybe, so hours can be traced, it is known as direct labor. The supervisor cannot be traced to each and every product because supervisor is not directly working on a particular product, because supervisor is roaming around in the factory and he is just seeing that everyone is doing his or her job well or not. So supervisor is an indirect labor. Similarly, there are other types of labor such as watchman, security guard. These are all indirect labor. Now, there are two types of expenses. One is direct and indirect. Again, the definition remains the same. The expenses can be directly traced to a particular product or service as direct, and that one that cannot be traced are indirect. See, all of the expenses, mostly expenses in the factory are indirect, such as electricity. We cannot trace that how much amount of electricity is used in making of a particular product. We cannot trace that how much rent is being used in making a particular product. So rent, electricity, depreciation, because depreciation is basically normally based on time, that is straight line method or some other formula. So depreciation is not based on particular unit. So these are all indirect expenses. Now, what constitutes a direct expense? Direct expense means an expense that can be traced, example of which is royalty. Now, what does royalty means? Royalty means if we are making a product that is not owned by us, we have taken license from abroad, maybe US, UK or some other country, and we are making in some Asian country this product. So the Asian manufacturer will need to pay royalty, a sum of money, to the original inventor of that particular product, the original founder who has this license for this product. So royalty is normally based on per unit. So royalty is a direct expense. So I hope you are getting the difference. If in the exam question it is written direct expense or royalty, this means the expense is direct, and if it is written only a general expense or factory expense, so we will be assuming an expense is indirect. So let's move forward further. First of all, we discussed there are three types of costs, namely material, labor, expenses. Then we discussed cost can be direct or indirect. So till now we have six types of cost: direct material, direct labor, direct expense or indirect expense. Now what is prime cost? Prime word has originated from primary. Prime means primary cost. Prime costs are sum of all direct costs, means direct material, direct labor and direct expense in factory are known as prime costs. Sum of all direct costs is known as prime cost, and sum of all indirect costs is known as overhead. Indirect material, indirect labor and indirect expense, if we add up all the indirect costs, this means an overhead. Now having said that, if any of your friend ask you whether an expense or overhead is the same thing or it is something different, so what will you be saying? See, there are two types of expense. You can explain him like that. See, dear, there are two types of expense. Expense can be direct or as well as indirect. So if expense is direct, it will be part of prime cost, and if the expense is indirect, it will be part of overheads. So I'm sure you are arriving at the differences between a direct cost and indirect cost. Sum of all direct cost is known as prime cost, and sum of all indirect cost is known as overhead. Not just indirect expense but including indirect material and indirect labor. Now overheads can further be divided into two categories. One is production overhead and one is non-production overhead. Production overheads are also known as factory or manufacturing overhead. See, production, factory or manufacturing is the same thing. Similarly, non-production can also be said as non-factory, or it can be written as non-manufacturing overhead. Now what are production overheads? Production overheads are overheads or costs that are arising in a factory, floor, and that are being incurred during production. Costs that are incurred in a factory during production to make a particular product or service are known as production overhead, and non-production overhead are costs that are not being incurred during production, means they are incurred before production or after production. These are not incurred during production, and these are not either incurred on factory floor, means these are incurred in some other departments which are support departments. What are the examples of non-production overhead? Firstly, what are production overhead? Production overhead are all indirect costs such as indirect material, indirect labor and indirect expenses that are incurred in a factory. Non-production overhead are selling overhead. Selling overhead means all the efforts that we are doing to sell a particular product, means we are opening selling outlets, we are conducting sales promotion, we are paying salaries to salesmen or sales girls, we are paying selling expenses, sales outlet rent, electricity or decoration. These are all selling overhead. Similarly, marketing overhead, we are printing billboards, whether it is print media or electronic media, we are giving ads on social media. These are all marketing related overhead. Administration, the cost that is not incurred by any other department is known as administration, and the work which is not being done by any other department is known as administration work. Administration means office, telephone, photocopy, internet, similar expenses. Distribution is known as delivery cost. It is also known as carriage outwards, means if we are distributing our goods to customer, maybe we are delivering it to customer's home, or maybe we are delivering it to supermarkets. So the cost of delivery includes the cost of driver, the depreciation of delivery van or delivery truck and lorry and whatsoever. And similarly, there are office overheads. Office overhead means all the costs relating to office, means accountant salary, and the office assistant or secretary's salary and office rent and similar costs. Then we have finance cost. Finance cost means the loan which we have took to finance our operations. That loan interest need to be paid to the bank, and the loan interest will be finance cost. R&D is research and development cost, which is done obviously prior to making a commercial product. So these are non-production overhead. So I hope you are getting key points relating to cost classification. Firstly, we discussed cost has three elements: material, labor, expense. Secondly, we discussed cost can be direct or indirect. Thirdly, we discussed cost can be production or non-production. Let's move forward. Then we have building up of cost. Building up of cost, if we are calculating a cost of a particular product, so what is the correct sequence? Firstly, we will write all the direct cost: direct material, direct labor, direct expense. As we already discussed previously, the sum of all direct costs is known as prime cost. After prime cost, we will be adding production overheads. Now, what are production overheads? Production overhead are all indirect costs, such as indirect material, indirect labor, indirect expense that are being incurred in a factory. See, prime costs are direct costs and production overhead are all indirect costs. This means these six costs constitute production costs. Production costs means all the six costs, whether they are direct or indirect, that are being incurred in a factory. After production costs, we'll be adding up non-production overhead such as selling, marketing, advertising. This means total costs. So let's move a bit further. We have already discussed direct costs, their examples: indirect costs, admin, selling. So secondly, we have inventory. Now we already know what does inventory means. From manufacturer's perspective, there are three types of inventory. Inventory in manufacturing account, there are three types of inventory. Firstly, it is raw material. Raw material is the ingredient or components that are used to make a particular product, such as plastic, such as metals, such as wood, such as chemicals, ink. These are all raw materials. Cement. Then we have work in progress. Work in progress, as you may have seen in some time when we are traveling somewhere, there are some road signs which are saying sorry for convenience, work in progress. Means a flyover or bridge or maybe a road is being made or constructed or renovated, means this is work in progress. Work in progress means we have started making a product but it is not completed yet. The product is just started and maybe it is 5% complete or 50 or 90% complete, but it's not 100% complete. It is work in progress. These are incomplete goods. Thirdly, we have finished goods. Finished goods are goods that are ready for sale, that are waiting for their customers to come and buy them. There are three types of inventory in a manufacturing environment: material, labor, and expenses. Let's move a bit further. Now we'll be discussing manufacturing account. Now manufacturing account is a key part of this CAIE syllabus. Manufacturing account normally comes in a 40 marks question in question number 5 in O-level exams, and it is also part of A2 level exams. A level, that is A2 second year. And manufacturing account that comes in CAIE O levels is already I've told you 40 marks, but there is some time that it is not being tested in question number 5 and it is being tested in question number 2 or 3, and if it is coming in question number 2 and 3, it will be of 20 marks. Now let's discuss what does a manufacturing account represent. Manufacturing account means we are calculating the cost of manufacture of products. Whatever cost is being incurred in a factory, these are referred to as a manufacturing account. Now it will always be made in a 2 column. Now these terminologies are very important as far as CAIE syllabus is concerned. If you will write any terminology other than those that I have displayed here, you will be losing marks in the examinations. Now first of all, we have already discussed there are 3 components. One is material, one is labor, and one is expense. We'll be writing first of all direct raw material. Now how to calculate direct raw material? First of all, we'll be writing opening inventory, then we'll be adding purchase. If we see this format is bit similar that you have already came across in making an income statement. that is opening inventory, add purchases, less purchase return or return outwards, and add carriage inward, and less closing inventory, this is less closing inventory. So but the difference is that these are all RN stand for raw material. These are all costs relating to raw material. If we take an opening inventory, this is the inventory that we have at the start of the year. If we'll be adding purchase of raw material, this means we have purchased a whole new lot of raw material, then we have returned some of the material that is faulty, then we have incurred some sort of carriage cost which will increase the price of our material, then this inventory is unused, we will be deducting it because we will be using it in the next financial year. So we will be getting cost of raw material consumed. This labeling is important. This labeling will give you 1 mark in exam. Cost of raw material consumed. Cost of raw material consumed means this is the total cost of raw material that is used this year to manufacture the products. Now after raw material we will be writing labor. In the exam it will be written with the name of direct labor or factory wages. Another name for factory will be production wages or manufacturing wages. After direct raw material we'll be writing direct labor. Thirdly we have direct expense or royalty. If we add up all the direct costs, it will be prime cost. Now it is not necessary that everything will be available in the exam. Sometimes purchase return is not present, sometimes carriage inward is not there, sometimes direct expense is not there. So I have written the whole format to just to make sure that these are all the things that need to be come in the examination. After prime costs, as you already are aware, prime costs are all direct costs. After direct costs we'll be writing indirect costs. Indirect costs are also known as factory overhead. Now factory overhead are all the costs that are incurred in a factory but which cannot be directly traced or identified in a product or service. Now what are these costs actually? First of all, there are some of the examples. This list is not exhaustive. Maybe there are other items as well, but these are the common items that usually come in examinations. Salary and wages, but the salary and wages should be of supervisor or management, because the salary and wages of factory worker will come in direct labor. If the supervisor is there, because the supervisor's cost cannot be traced, supervisor or watchman or security guard or manager will be coming in overhead. Then insurance if it's relating to factory. Then indirect overhead, maybe with the name of indirect overhead. Then heat and light, again if it is relating to factory. Rent if it's relating to factory or manufacturing. Depreciation only which is charged on factory equipment. See, if there are costs that are not relating to factory, means the cost relating to admin, the cost relating to office or selling, marketing, these won't be coming here. The cost relating to admin or office will be coming in next statement, which is income statement. In manufacturing account, all the costs that are coming relating to factory, central expenses relating to factory, we will add all the factory overhead, and this is the total of this. All the totals are coming in the second column. As you are already aware, these are not debit credit, these are just for presentation, 2 columns. This is the final figure. Lastly, we will adjust work in progress. Now what is work in progress really? Work in progress is incomplete goods, as we have already discussed. We'll be adding opening work in progress and deducting closing work in progress. It is very easy to remember this because we'll always add an opening inventory and less a closing inventory. Now what is the reason of adding this work in progress? The reason is that in the last period all the goods were not completed, so we will be completing the goods that were left incomplete in the last accounting year. So we are adding the cost of incomplete goods to complete it in this accounting period. Now this is also not necessary that at 31st December, the night of the new year, all of the goods are suddenly complete. Means there are some costs, that are some goods that are still incomplete. So we will be completing these goods in the next accounting period. So we'll be deducting these here, and the final answer is production or manufacturing cost. See, if the opening inventory is less and closing inventory is more, the net deduction will be negative. But if the opening inventory is greater than closing inventory, the net deduction, the net amount will be positive. We will be adding this, and the final answer is production cost, manufacturing cost, or it is also known as cost of goods manufactured. So I hope you are getting the idea of how does a manufacturing account is being constructed. Now I'm moving forward to the next part, that is income statement. Manufacturing account comprises of around 12 to 15 marks in CAIE examinations. Then we'll be coming at income statement. In income statement, we are making income statement for the outlet. In manufacturing account, we were making accounts. In manufacturing account, the cost was for a factory. Manufacturing account is all relating to a factory, but income statement is relating to a sales outlet, the sales showroom or sales outlet. It is income statement. First of all, income statement, we will be writing sales revenue, that is sales or revenue. Again, all of these items are relating to finished goods, because in outlet we are not dealing with chemicals. Here we are selling the final product, the product that is ready for sale. Again, the sale is for finished goods. Then cost of sale, this is a similar pattern which you used to study in a sole trader format. Opening inventory, add purchase of finished goods, less return outward, or purchase return less closing inventory, then cost of sale. One thing that is new, that is not coming in regular income statement, that is relating to a sole trader, is that of production or manufacturing cost. Now, where does this production or manufacturing cost will arise? Production or manufacturing cost we will already be calculating in the first part, production or manufacturing cost. Then in second part, we will be only writing the total of production or manufacturing cost. There can be production cost, or there can be purchase of finished goods as well. Means in our sales outlet, most of the products are our own brand that we have made in a factory, that we have manufactured in a factory. But there may be a situation that some of the products are not available with the factory, and we will be buying these goods from outside suppliers, because we do not want to upset our customers just because our factory is not producing particular type of products. So we will be buying these products from some outside supplier. Then we have cost of sales. After deducting cost of sale from revenue, we'll be getting gross profit. As you already are aware, gross profit is not final profit. There are some adjustments that need to be made. We'll be adding other income. Now, what is other income? Other income is income that is not directly related to the trading outlet, the trading activities of the business. Income that is other than selling, ordinary selling activities. Anything that is received in the examination is coming in other income, such as rent received, commission received, discount received, interest received, anything that is received. Then if we have a decrease in provision, as you are already aware, if the provision is decreased during the year, this is income, and if the provision is increasing during the year, this is an expense. Then in place of expenses, we will be writing a different terminology, that is non-manufacturing overhead. Non-manufacturing overhead, or it is also known as non-production or non-factory overhead, are expenses that are not relating to production. Expenses that are not relating to production will come in here, such as expenses relating to office, expenses relating to admin, or finance, or selling, or marketing, or distribution, and depreciation of office related assets. In short, any cost that is not relating to factory but is incurring in the organization will be coming here in a non-manufacturing overhead column. The final figure will be profit for the year or loss for the year. If the column is, the final answer is positive, obviously it is a profit for the year, or if it is negative, this is loss for the year. I hope you are getting manufacturing account pretty well. And lastly, we have a statement of financial position. Forgive me if the lecture is getting bit longer than you first thought, but I would like to cover all the aspects. Thirdly, we have a statement of financial position, which is also known as balance sheet. The previous name, old name is balance sheet, and the new name is statement of financial position. Now, as you are already aware, balance sheet is made in 3 columns, statement of financial position. First of all, this is made in the format of accounting equation, which is assets is equal to capital plus liability. First of all, we have assets. There are 2 types of asset, as you are already aware, non-current asset and current assets. we will be making 3 column: cost, accumulated depreciation, and net book value. Cost means the original cost at which we bought the asset previously. Accumulated depreciation, which is also known as provision for depreciation, means how much depreciation is charged till date on these assets, and net book value is the difference between the two. This means this is the value that is remaining in our books for non-current assets after all the accumulated depreciation has been deducted. So you know how to calculate these figures. This is easy. Then in current assets, we'll be writing 3 types of inventory. This is particular difference in a manufacturing account balance sheet as compared with a sole trader balance sheet. In a sole trader, there is only one inventory. In a manufacturer or producer accounts, there are 3 types of inventory. We'll be writing all 3 in the first column: raw material, WIP, and finished goods, and we'll be adding up in the second column. Then we have trade receivable. This is easy. We have already discussed this previously. Where provision for doubtful debt is deducted from trade receivable, and as you are already aware, bad debt is already been deducted from trade receivable. In balance sheet, the debtors that will arrive, it is after bad debts. Then we have prepaid expense. An expense that is paid in advance is an asset because we'll be getting benefit from it in the future. Accrued income is also asset, means we have provided the services, but the money is yet to come because it is our receivable. Then bank and cash, which is known as cash and cash equivalent in new curriculum. So we'll be adding non-current asset and current asset. This means total assets. After total assets, there comes capital and liabilities according to accounting equation. Now, how is capital calculated? It is similar as we are doing in a sole trader business. Opening capital, which is already given in the exam. Always the capital that is given in the exam is opening capital, and closing capital is never given. It is always calculated by us. Then add profit for the year, which will come from income statement. If there is a loss, we'll be deducting it because loss reduces our capital and profit increases our capital. Then we'll be deducting drawings. As you are already aware, drawing reduces our capital. Then this figure is closing capital. We need not write this because it is an understood figure, and mostly the CAI examiner also don't write the label for this closing capital. Then after capital, the final figure is liabilities. If we write a non-current asset first, we'll be writing non-current liabilities first. Non-current liabilities, obviously the loans that we have to pay, that we are obliged to pay more than 1 year after the balance sheet date. We are recording this lecture in 2018 and the loan is being repayable in 2020. This means loan is a non-current liability. If the loan would be 2019 and if the current year of the question is 2018, the loan will be showed in a current liability. And if any date is not given in the loan, then the loan is always non-current liability. 6% is the name and year need to be mentioned. If we are skipping this 6% and 2020, we'll be losing 1 mark. Then in current liability, there are trade payables, which are creditors, bank overdraft. If the bank is in minus, it is overdraft. Then accrued expenses, which means we have incurred the expense but we are yet to pay these are known as accrued expenses. Then lastly, there is a prepaid income, means we have received the income but we have not earned it yet, means this is a liability for us. Then we'll be adding up capital, non-current liabilities and current liabilities. The final figure is total capital and liabilities. As you are already aware, accounting equation, assets is equal to capital and liabilities. Asset side always equal capital and liabilities. So I'm sure you got a slight idea of how does the manufacturing accounts are being prepared. Now if we'll have some question, we will be solving the question and you will be getting all the points together. I hope you understood the topic. Jazakallah. Allah Hafiz.